Hello friends, today we're talking about the real estate market here in the greater Iowa City area, and we're going to dive deep into everybody's burning question. Is the real estate market going to shift? Are we going to see this real estate bubble burst? And when can we get off this crazy train? Hi there, my name's Emily Farber. I'm a realtor with Leopard-Craig Realtors, and I create YouTube videos all about real estate in the greater Iowa City area designed to help people just like you make smart decisions when it comes to buying, selling, and relocating in the Iowa City area. If you're interested in any of those things, you should be sure to download some of my handy free guides. They're available down below in the description box of this video. If you're watching on your phone, just tap the title of this video and that description box will open right up for you. Alrighty, all markets operate in cycles, including the real estate market. Normally, the real estate market reflects national economic conditions and is greatly impacted by factors such as the economy, interest rates, and housing supply and demand. The intensely strong seller's market that we've been experiencing here in 2021 was a big surprise for a lot of people because our national pandemic-battered economy didn't seem to support it. However, there was a wild card at play that we've never seen before. The pandemic unearthed a deep feeling of FOMO, fear of missing out, in so many people. The national psyche has clawed its way out of the 2020 season, searching for meaning, fulfillment, and elbow room. So many people discovered that they can work from anywhere, so then they figured, why not move to where I want to be? And they did. Hindsight is always 20/20, and I think that when we look back on this time period, it will be seen as an era of great migration. Interest rates bottomed out, and suddenly borrowing money has become so cheap that it seems ridiculous not to do it. And 2020 taught people that there really is something to be said about having your own place in terms of space and peace of mind and knowing that you're not sharing the same breathing room with a bunch of other people. Inventory, the number of houses available to purchase, was already very low coming out of 2020 because so many sellers put their plans on hold due to worldwide uncertainty. New construction starts were also super low due to builders mistakenly thinking that they had to put the brakes on building because the pandemic and because of obnoxiously increasing lumber and other building material costs. So what happened? A feeding frenzy of buyers fighting over the available houses for sale left buyers in bidding wars and sellers asking top dollar. Then some buyers found that they were in the position of forgoing inspections and waiving appraisal contingencies. Buyers were throwing cash at the wall in hopes of enticing sellers with a sense of security in their financial ability to perform. Whew, it's been a lot. Buyers have become burnt out. Repeated rejection is hard, and throwing all caution to the wind is scary. The feeling of being taken advantage of by sellers is causing some buyers to become just jaded and throw in the towel for the time being with the hopes that prices might adjust downward. So what are the signs of a shifting or a cooling real estate market? It's not like somebody sends us a memo and says, hey, the real estate market's slowing down. But those of us with a finger on the pulse of the market look for signs. One sign is an increase in inventory, the number of properties available on the market. Another sign is an increase in the number of days on market, the number of days it takes for a home to sell. A third sign is a cooling of home prices, either a leveling out of price appreciation or maybe even, if we're lucky, a slight depreciation. Fourth sign is an uptick in the number of price reductions. With these metrics in mind, what are we seeing here in the Iowa City area MLS? Well, anecdotally, I've been feeling like the faucet of new listings has gone from a drip to a trickle. There seems to be just ever so slightly an increase in the number of homes available. You know I love number data to back things up, so I've taken a look at April, May, and June of 2021 MLS numbers, and I've compared them to the same period in 2020. In April and May of this year, we are sitting at a 31 to 32% decrease in the number of single-family homes available as compared to this same time last year. But the June numbers here in 2021 show just a little bit of movement. In June of this year, we were at a 26.76 decrease in the number of available listings as compared to June of 2020, which is a 5% improvement from the previous 2 months. Baby steps, right? One of the difficult factors in real estate is that when it comes to trends, things just don't happen instantaneously. It can take a couple of months to really see a change in the way the wind is blowing. The reason for this is that almost every transaction that closes and becomes searchable data is at least a month, sometimes 2 or even 3 months behind from the time we can analyze it. While it is possible to close a house in 30 days in our market, 45 would be average, but 60 to 90 days is not unheard of. When looking at the June 2021 data, I am not yet seeing numbers-based evidence for an increase in the number of days on market, nor am I seeing a decrease in prices. In fact, average sales prices for single-family homes in Iowa City, Coralville, and North Liberty has been inching up month over month. And at June in 2021, we are at an all-time high with an average list price of $370,963 and an average sold price of $372,596. Note that that sold price is more than the list price. But again, keep in mind that these prices are reflective of the frenzy that was going on in April and May when those buyers wrote their offers. The boots on the ground feeling in Iowa City right now is that prices may have hit their peak because the number of multiple offer situations is decreasing and homes are taking a little bit longer to sell. A highly desirable house that would have had 6 offers on it back in April, maybe 4 offers on it in May, now here in July, it might only have 2 offers. This tells me that the bulk of that just crush of active buyers that we saw early in the spring, all of those people have either now bought a house or they are under contract or they've thrown up the white flag and they're taking a pass until a later date. Our perspective right now is so wacky that if we see a house that's been on the market for a week or 2, we think, what's wrong with it? When in reality, that is totally normal. It's just going to take us a minute, all of us, agents, buyers, and sellers, to recalibrate what the shifting standards for normal are. Am I saying that now is the time to make a lowball offer? No. But what I am saying is that I think we have hit the peak and things are starting to settle down a little bit. The actual numbers-based proof won't be available for a few more months as we wait for properties put under contract during this time to close. But you can count on me to keep my eyes on it and update you in a future video. What are your thoughts about the current real estate market and what are your predictions for the future? Tell me about it in the comments section down below. Hey, it's been fun and I'll catch you later.